Well, for more on Ben Bernanke's testimony later this morning, we are joined now by someone who Bloomberg Businessweek called the Republicans' shadow Fed chairman, whose work is followed closely in Washington by lawmakers. John Taylor, he's the professor of economics at Stanford University and also creator of the Taylor Rule, which basically helps central banks guide them on what they need to do with monetary policy, their interest rates. John served as undersecretary of the Treasury for International Affairs during the first term of the George W. Bush administration. Professor, great to have you back on the program.
Great to be back.
What does Bernanke have to say today, in your view, to gain some credibility with critics like you and people who agree with you?
I think he needs to answer whatever questions come forward about the effect of this quantitative easing too. It's still quite controversial. There's been a lot of criticism of it, both within the Fed and outside the Fed, and in particular from other central bankers. So I think he needs to talk about it, give some guidance about where it's going. It's obviously not going to stop until this particular part is finished.
Right.
But I think that's probably one. And then, of course, the issues about inflation and the economy, the usual ones.
But John, I mean, is there anything that actually Bernanke could feasibly say that would ever convince you that QE1 and QE2 were the smart moves?
Well, I've criticized QE1 by looking at its impact, which I found to be quite small. QE2, it just was gone the wrong direction, if you like, because it was supposed to lower medium-term treasuries, and of course they've increased since then. Mm-hmm. The answer to that is other things have influenced it, but it's really hard to see the impact. I think what would be good for many is to begin discussing the future here a little bit. What's after QE2? What's after this extraordinary period of monetary policy? When are we going to get back to the kinds of policies that worked so well in the 80s and 90s? That's the exit strategy. I think that's really what would be reassuring to people. How are we going to get out of this situation?
I'm glad you bring that up, because what was interesting was, if you read the Journal today, there was an interview with the Bank of Japan governor, perhaps giving a little bit of help, I don't know, to Ben Bernanke. Let me just read you a quote from this interview that he did with the Journal, John, which he says, quote, "The Bank of Japan has been a lonely forerunner that has implemented novel, innovative measures in a large-scale manner." Basically, he says that the BOJ has been at the forefront of all of this, and what we've seen the Fed doing is exactly what the BOJ did a decade before.
Well, you know, the BOJ had a huge problem in the 90s. It didn't pay attention to money growth. It let it slip. Policy was generally too tight. And finally, around 2001, that's when I was at the Treasury, they began to have a policy to get out of that. They tried to raise money growth. But it was quite temporary, and I think they pulled back as soon as they could, and it was innovative. But the main thing they were trying to do, as many of us argue they should, is raise money growth from these abysmal levels. Mm-hmm. In the case of the Fed, it's really not been so much raising money growth. It's just these short-term big stimulus, buying treasuries, buying mortgage-backed securities. So I think it's quite different, quite frankly.
Okay, so it's not working in this case, is what you're saying, with what the Fed is doing. John, I mentioned earlier that you're the inventor of the Taylor Rule, which basically helps central banks, to put it in a nutshell, help central banks guide them on where they need to go with interest rates. So taking your Taylor Rule and applying it now to the economic conditions now, where does monetary policy need to be?
Well, it suggests we should begin thinking about raising rates not too far from now. In fact, for last year and most of the 2009, this kind of Taylor Rule thing suggested rates close to where they were. It's not really been anything to criticize the Fed on the basis of, so I haven't. But now with inflation beginning to show some signs of picking up, and of course the economy picking up, there's definitely indications by these kinds of rules that rates should begin to rise. And you're seeing that a bit in the markets already, I think, the futures markets. So definitely it should be something on the agenda about how rates will rise in the not too distant future.
Where do you see inflation being most worrisome then, John?
Well, you can see it in commodity prices already. And of course, we're talking a lot about oil because of the disturbances in North Africa and the Middle East, but it's been moving up for quite a while. And what is happening, I believe, is these very accommodative monetary policies, a lot of liquidity is forcing prices to rise. And it's starting abroad. Frequently it happens that way, but you're beginning to see signs in the United States as well. And so that's what the Fed has to be on guard for, to begin to make the moves when and if inflation picks up more than it has so far.
But it sounds as if, though, there could be this problem, right, John? Correct me if I'm wrong, where you may start to see some signs of inflation. As you say, you are starting to see that now, but that could derail the U.S. economic recovery and would only give justification for Bernanke to continue the low interest rate policy, right?
One of the worst things that could happen is if the Fed gets behind the curve here. And there's a worry about that already. But if they get behind the curve and inflation picks up, it's very hard to come back and cause it to come down without disturbance. So we saw this in the past. In the 70s, inflation would pick up and the Fed would be behind the curve, and then that would have a recession. So I think the most important thing is, if you like, to be preemptive and not let this happen, and then we'll have a good chance for a strong recovery, get this high unemployment rate down.